Hello students, so today we are going to discuss 2024 October correction of accounting error lesson question. So we'll start the question. On 31st May 2024, Hassan identified the following errors. Error number 1, an invoice from a supplier 215 had been entered in the purchase day book as 251. Error number 2, motor expenses 76 had been posted to the motor vehicle account. Error number 3, no entries had been made for goods cost 850 taken by Hassan for his own use. Error number 4, sales 892 Mali had been posted to the account of Mali. Error number 5, additional liquid introduced by Hassan 3,500 had been debited to the equity account and credited to the bank account. Question number 1, state the type of accounting error in each scenario.
Error number 1. Before correcting this error, it is important to understand what is meant by source document, which is invoice in this case, and what is prime entry book. In this case, it is purchase day book. Also, we need to understand what is the connection between the source document and prime entry book to the main accounting process. For that, we'll quickly discuss what is meant by accounting process. Accounting process starts with transaction, then it will be recorded in source documents, then it will go to prime entry books, then it will go to ledgers, and it will be recorded in the trial balance, and based on this trial balance we are preparing the financial statements. Also, the second thing you need to understand is how to record transaction in the purchase day book. We'll quickly discuss a simple example to understand this accounting process. So in this practical example, I have given you two credit purchases. So credit purchases will be recorded in the purchase day book. So first of all, you need to draw the purchase day book format. Then we are going to record the first transaction. 1st January 2025, my invoice number is 1. Then supplier name is John and the amount is 1000. On the same date, I am going to individual John supplier account, which is a liability account, and I am putting the date 1st January 2025. I'm writing purchases, put in the amount. We are not writing the credit entry on the same date. Okay, now we are recording the second transaction. Second transaction happened 1st 8 January 2025. My invoice number is 2 and the supplier name is Adam. Amount is 2000. On the same date, I'm going to Adam supply account, which is a liability account. I'm putting the date 8th January 2025, purchases, and I'm writing the amount 2000. When the month end comes, I'm getting the total here. 31st Jan 2025, I'm getting the total here 3000. I'm writing here debited to purchase account. Then I'm going to the purchase account. I'm writing the date 31st January 2025. Trade payables, and I'm writing the amount 3000. Then I'm going to balance these accounts. 1000 here, 1000 here, balance carried down 1000 here, balance brought down 1000 here. Then I'm going to add an account. I'm balancing in the same way. This side has the highest number. I'm writing the amount 2000. Same number should be written here, 2000. And balance carried down from here, 2000. And balance brought down from here, 2000. Okay, now remember, those two accounts are liability accounts, so you need to write balance carried down and balance brought down like this. But when it comes to the purchase account is an expense account which is going to the income statement, so we cannot write balance carried down, balance brought down. We need to transfer this amount to the income statement. I'm writing income statement 3000. Now let's say you are preparing the trial balance based on these transactions. Tell me how we are going to prepare the trial balance. Okay, so you draw the format like this, and remember we are preparing this trial balance without the control accounts. Okay, so account number 1, John supplier. We have a credit balance of 1000. Write debit here and credit here. Okay, then write Adam supplier. In the credit side, you write the amount 2000. And purchase account, in the debit side, you need to write 3000. Since you have recorded all the transactions correctly, your trial balance should match. 3000 here and 3000 here. This is how you record transactions in purchase daybook. With that practical understanding, we'll discuss accounting error 1. An invoice from a supplier 215 had been entered in the purchase daybook as 251. So let's quickly draw small purchase daybook so you can easily understand. Purchase daybook. So here they have mistakenly wrote the number 251. If it is wrongly written here, then on the same date it will be recorded in the trade payable account also, the wrong amount 251. Okay, when the month end comes, you are getting the total, and this total will be posted to purchase account. So here we are debiting purchase account, debiting trade payable account, crediting. Okay, now here you can understand the correct amount is 215, but we have recorded extra in the purchase account and trade payable account, in both accounts. So what we have to do in order to correct this error, okay, this excess amount we need to remove from this respective account. Okay, now here the original amount should be 215. So how much extra? It is 36 extra. So what we are going to do is we are crediting 36. Why? To cancel the extra. Here we are crediting 36. Here also, when you go to the trade payable account, here also in the credit side, 36 is extra. Okay, so in order to remove this extra amount, you are debiting 36 here to cancel. What is the journal entry? What is the correction entry? Trade payable account debit 36, purchase account credit 36. Okay, now what is the type of error? Okay, so you have done a mistake when you are writing the original number, so it is error of original entry. Error number 2. Motor expenses 76 had been posted to the motor vehicles account. So, what has happened? I need 3 accounts for this. First one is motor vehicle account. Second one is motor expense account. Third one is cash or bank. We don't know exactly the mode of payment, so either you can take cash or bank. So what they have done, they have incurred 76 motor expenses. So I'm crediting 76 to cash or bank. Then technically I should record it in the motor expense account, but mistakenly I have debited into the motor vehicle account. If you don't understand how to identify the credit or debit entry, you simply refer to this double entry principle. Now here, cash or bank is my asset and this balance has decreased. That's why here I am crediting 76. Okay. And this is motor expense. So technically I should debit this account to motor expense account, but mistakenly I have recorded in the debit side of the motor vehicle account. 76. Now you need to understand motor vehicle account is a non-current asset. Simply this is a asset account. This is a asset account. Okay. But motor expense account, this one, this is a expense account. So technically it is an expense, but you have recorded in the asset account. So principally it is wrong. So what you have to do in order to correct this, recording 76 in the debit side of this account is wrong. So in order to cancel this 76, you need to credit to the motor vehicle account. This is to cancel. Okay. On the other hand, it should be recorded in the debit side of the motor expense account. Why? Because as per the double entry principles, increase of your expenses should be debited. So it should be debited here. 76. This is to record. So this type of accounting error is called error of principle. Why? Because originally this is an expense transaction, you have mistakenly recorded it as an asset transaction. Error number 3. No entries had been made for goods cost 850 taken by Hassan for his own use. So this is called error of omission. You have completely omitted this transaction. So what you have to simply do, okay, since the double entries have not been posted, you need to write the original double entry. Okay, so drawings account and this is purchase account. So the double entry is drawings account debit 850 and purchase account credit 850. Error number 4. Sales 809 to Mali had been posted to the account of Mali. In order to correct this error, I need 3 accounts. Mali trade receivable account, Mali trade receivable account, and the sales account. So originally this is credit sales to Mali. So what is the double entry? Sales account needs to be credited 890. Okay, so technically it should be recorded in Mali's account debit side, but mistakenly we have recorded in the debit side of Mali 890. Okay, now where is the accounting error? Accounting error is here. This is wrong. It should be recorded here. Okay, when correcting this error, do you have to touch the sales account? No, sales account is correctly recorded. The entire transaction has been recorded correctly inside the sales account, so you don't have to touch this account. Okay, so in order to correct this error, what you have to do, first of all, recording 890 in the debit side of the Mali account is wrong, so we need to credit 890. This is to cancel. Okay, and it should be recorded in the debit side of the Mali account. This is to record. So what is the correction entry? That is Mali account debit 890, Mali account credit 890. Error number 5. Additional equity introduced by Hassan 3500 had been debited to the equity account and credited to the bank account. Before correcting this error, we need to discuss what is the double entry for additional equity. Okay, now here they have introduced the capital through the bank account. So the double entry should be bank account debit 3500, equity account credit 3500, but mistakenly they have recorded the transaction in the reversed way. Okay, that means let's draw two T accounts. This is bank account, this is equity account. If you are going to correctly record this transaction, you should debit to the bank account and you should credit to the equity account. But what you have done is, as per the accounting error, you have debited to the equity account. How much? 3500, and you have credited to the bank account. You have done the exactly opposite. Okay, so in order to correct this entry, what you have to do, first of all, recording 3500 in the debit side is wrong. You need to credit it 3500 to cancel. Okay, when you credit 3500, the account balance this account balance becomes 0, but we need 3500 to the credit side. That means again you need to credit 3500 to record. Once you credit 3500 again, then your accounts balance is 3500. Okay, here now this is receipt of the cash, so crediting 3500 is wrong, so you need to debit 3500 here to cancel. Okay, so once you debit 3500, your accounts balance becomes 0, but we need 3500 in the debit side, so again you need to debit 3500. This is to record the balance, then your account balance becomes 3500. Okay, so the correction entry should be bank account debit 7000, then equity account credit 7000. This type of error we call error of complete reversal.